Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. Markets in Japan are reacting to the election over the weekend of Sanae Takaichi as the leader of the Liberal Democratic Party. Takaichi will soon become Japan's first female prime minister, and she's likely to be supportive of more fiscal stimulus. She's already expressed an aversion to further rate hikes from the Bank of Japan. In a moment, we'll get the views of Christopher Lafleur. He is the chairman of AmCham Japan. But we begin in Singapore with Bloomberg's Paul Dobson. Paul is executive editor for Asia Markets. Paul, thank you so much for being with us. Obviously, the equity market is rallying. We've got a much weaker yen. It seems as though markets were a little surprised by this outcome.
I think that, although Takaichi had the popular votes, the way that the LDP chooses its leader is a little bit complicated and also requires lawmakers to give their nod. And they had been seen as being more minded to go with more of a centrist choice. And hence, I think the market was caught out a little bit by the fact that Takaichi in the end secured the victory. And, what we're seeing is, like you said, a pretty violent reaction, the yen weakening more than 1% from the open, and the flip side of that being a rally in equities markets. And I think that it's two things. One, she's seen as being likely to, as you said, push for more fiscal stimulus, which should be supportive for the economy and supportive for equity markets. But at the same time, if she is discouraging in some way the Bank of Japan from pushing those interest rates higher, then that may cause the yen to weaken, as we've been seeing, and that also may help exporters in Japan when they're selling their goods abroad. The key thing to watch is the reaction in the bond market, which is at the moment a little bit uncommitted. That will really tell us whether she can get away with her policies, because if there's enough fiscal space to do it, or if investors are going to keep on demanding higher yields if the Japanese government wants to increase borrowing in order to fuel that fiscal stimulus. Yeah,
no doubt about that. But I'm curious to get your view on the probability of the BOJ remaining on the sidelines now in the face of inflation that's well above target. I mean, I understand that there is concern about trying to keep the cost of credit as low as possible, but Japan really doesn't have much to worry about on a relative basis. I mean, interest rates are still very, very low. The bigger problem is inflation.
It's true, and inflation is unpopular in Japan, and part of what Takaichi wants to do is to help people to manage those inflation risks. So it's an interesting one from that perspective. The Bank of Japan has been pretty clear and pretty adamant that as long as the economy turns out the way that it's expecting, then it will continue to push interest rates higher, and it feels like it wants to raise interest rates again sooner rather than later. It's going on a pretty slow course as it adjusts to this new environment where it's able to have higher interest rates. It's still being very cautious in the way that it moves. And yet, we've heard from several policymakers that have been hinting at the idea that it's time to get going again. So whether the politics leaves them wanting to wait a little bit longer and just see what comes out before they act or not could give us some sort of way to trade around it. And I think that people will be very attuned to what the BOJ policymakers are saying in terms of how they trade government bonds and currencies going forwards from here.
I want to change gears, talk a little bit about the crypto space, because over the weekend, early Sunday in the States, we had Bitcoin setting an all-time high. And the positivity seems to be continuing now in Asian trading. What are people saying about Bitcoin?
Yeah, so I don't think that the two are completely unconnected, Doug. I think one of the sort of hot topics at the moment in not just the crypto space, but in financial markets in general, is this idea of a debasement trade, that people don't want to own fiat currencies, and so they're looking for alternative assets to that. Not very keen on owning the dollar because of the pressures from the US government shutdown, the disagreements there, and the fact that the Fed is going to be cutting interest rates. Not really keen on owning the yen, of course, for all of the reasons that we discussed about Takaichi's government and the BOJ. Not keen on owning the euro either. That's got its own fiscal problems at the moment, particularly if you look at France, where the government seems to be in this complete standoff at the moment moment and a bit of a gridlock, not able to get things done. British pound, has its own problems as well that we've been talking about for a long time. There's a budget coming up in November that the market is anxious about. People thinking, we don't really want to own any of those. We would much rather own gold, which continues to skyrocket higher, pushing towards $4,000 an ounce. We want to own Bitcoin because, that gets us out of the other currency system. And so we're seeing record highs in the crypto space as well. And I think beyond that, if you look at silver and other precious metals, they're also having a good ride. So I think that, that's one of the narratives, and it's standing the market in good stead for people that are looking at alternatives outside of the currency space at the moment.
Well, you mentioned the government shutdown here in the U.S. I think it's fair to say it's created somewhat foggy conditions given the lack of official government data. I mean, the employment report from last Friday has already been delayed. If this shutdown were to persist, maybe the consumer price index report is in doubt. That's due on October the 15th. The question is whether markets have become a little complacent in the face of all of this.
So, I suppose, if you're thinking about the equity space where stocks continue to go higher, then you could certainly detect a little bit of complacency there. Although I think that the stocks narrative is really about this AI enthusiasm. Every day we seem to be seeing more deals, more agreements, more tie-ups between the various players involved. And every single one of those seems to give the market a new catalyst for pushing towards higher highs. I think, the other thing that you have to keep in your mind and factor into those calculations and considerations is if the Federal Reserve policymakers don't get any more new information from those sort of public data points and only from the private sector surveys and so on, does that make them less likely or more likely to continue with the path of cutting interest rates? Feels like, if you looked at the dot plot at the end of the last Fed meeting, there were more people minded to pursue another 2 cuts over the course of the year. On the other hand, we don't know how many of those were voting members. And some of the policymakers that we've heard from have still been quite adamant about their caution over inflation risks. So I feel like it would be a very difficult Fed decision at the end of the month without a little bit more data. On the other hand, if we do get that inflation data and it does show the inflation is starting to moderate or at least holding in check, then probably the market will believe that the Fed is going to keep on cutting interest rates, in which case you could say that we're not complacent, we're just reasonably priced for that.
Well, we'll see about that because at the end of the week we'll get the consumer sentiment survey from the University of Michigan. So maybe a view on job opportunities as well as inflation expectations. I have to ask you about the higher oil price that we're seeing right now. We had an OPEC Plus meeting over the weekend. Not really surprising that the cartel agreed to a modest increase in production beginning in November. What are people saying about the price action of the oil market today?
Yeah, modest, I think, is the key word to focus on there, Doug, because although people were expecting them to continue to increase production, it seems that after we had the big drop in prices over recent days, they responded by deciding, not to go full tilt on continuing to push that output higher. And so maybe that suggests that there's a little bit of a price floor objective, some of that sort of to play in mind at the back of the OPEC officials' minds. And therefore, although we're going to continue to see more oil seeping into the market, perhaps it will be at that slightly more slow pace. I think it's interesting on the supply side as well. We're continuing to see China gobble up large amounts of the oil that's coming into the market. And so that actually, it seems like putting it into storage most likely, although we don't have very clear data on that. And so that seems to be counterbalancing a little bit, or at least helping to provide that floor for prices.
We'll leave it there. Paul, it's always a pleasure. Thanks very much. Paul Dobson there. Paul is executive editor for Asia Markets, joining from Singapore here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. We continue now with reaction to the victory of Sanae Takaichi as leader of the Liberal Democratic Party in Japan. She's on track to become the country's first female prime minister. For more on the election, we heard from Christopher Lafleur. He is the chairman at the American Chamber of Commerce in Japan. He spoke with Bloomberg TV host Sherry An and Avril Hong on the Asia trade.
Give us your reaction first to Takaichi's win here, because you've had a few conversations with her over the past couple of years already.
Certainly. Well, over the years, and particularly when she served as the Minister for Economic Security in the Japanese government, we've maintained a very good dialogue with her on the issues I recall personally attending a meeting at which she delivered an excellent speech in fluent English, I might add, to our group to reassure us the Japanese government was fully cognizant of our concerns with regard to recently enacted Japanese economic security legislation. So, as I say, we have a good dialogue with her over the years, and we certainly congratulate her on becoming the Liberal Democratic Party's first female leader. And as you've indicated, we'll see what the Diet decides later this month. But of course, there's high expectation that she will eventually become the next Prime Minister of Japan.
Her fluent English, as you mentioned, could also come in handy if she does, in fact, get to meet President Trump later in the month. She has talked about potentially renegotiating the trade deal if needed. What do you make of that?
Well, I think that was a reference to a comment she made in one of the debates that was held for the LDP presidential candidates. But I think she was carefully caveating that. And I expect that she and her government will continue to try to implement faithfully the agreement between the two governments, because I'm quite confident that she wants to maintain the best possible relationship with the United States. You'll recall that she was a very strong supporter and indeed served in the cabinet of former Prime Minister Abe, who is also well known for having a strong relationship with President Trump. So I expect that she will start off by having just as strong a relationship going forward.
What about the relationship with other regional trading partners? We know what her stance towards China might look like. Are you expecting any developments towards South Korea or even to China against this backdrop?
My sense was that she took great care during the party presidential campaign to avoid creating any additional tension in Japan's relations with its East Asian neighbors. And I would anticipate that as Prime Minister, particularly given her other priorities, that will continue to be her posture.
What are you hearing among businesses about the potential for addressing some of the challenges that they are already facing, including cost pressures or labor issues? We know what she said previously about immigration as well.
Right. The expectation, of course, is that she's going to pursue a more expansionary fiscal policy. And I think for business in general in Japan, that's going to be a positive. You've already seen in the Tonkan a few days ago that Japanese business confidence is picking up now that the U.S.-Japan tariffs deal has been concluded. And I think her ascension to the leadership will further encourage business to invest, even as she considers ways that the government can be more supportive.
What are some of the supportive government measures that your business members would like to see from this new administration?
Well, we're very much focused on general business conditions in Japan, of course, and naturally we would like to see our markets here expand further. As they do that, we also want to continue encouraging the Japanese government to continue its structural reform efforts. And in this area also, I think it's important to recall that the new LDP president was very much a supporter of former Prime Minister Abe's Abenomics program, which included, very importantly, encouraging further structural reforms in Japan. Along those lines, we'd certainly want to encourage the Japanese government to ensure that its coming economic security measures continue to take the importance of foreign company participation and a level playing field as a key element. We certainly would like to see improved policies encouraging innovation and stable supply in the pharmaceuticals area. And we certainly also hope that as the Japanese economy further picks up, there'll be an even greater market for aerospace products from U.S. manufacturers.
Christopher, thank you so much for your insights. Great to hear from you on what her policies might entail and what the business community wants to see. Christopher Lafleur is chairman at AmCham Japan.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.